Hello traders, Gary Wagner here, just about 10:15 in Honolulu, 4:15 in New York. It is Wednesday, the 21st day of October, 2015, and this is the daily report for gold and silver. We have precious metals across the board down today. Gold trading off about $8 to $8.50, 1167.11. That, of course, is when we look at spot gold with a low of 63.82 and a high of 79.24. COMEX down 1070. In terms of the drawdown itself, we're looking at about a percentage drawdown to a 3/4 percentage drawdown on the day. Silver is faring a little bit harder on the market, down about 19 cents or 1.2% lower, and it is trading well below $16. You can see this dramatic plunge on our weekly chart. You can easily see that silver has lost approximately 50 cents on the week. On yesterday's show, we looked at different levels of Fibonacci-based support and resistance lines to ascertain if in fact this market continues to go down, what levels can we look at? And if it's going to find support, where can we look for some potential support in the market? Of course, we went long at 44. That was right in this area here with these two red candles here. And as the market came up, we noticed on Thursday of last week that we had a doji appear in the market. We talked about the fact that this type of candle is indicative in many cases of a consolidating market and is really the beginning of a transfer between factions, in this case, a handoff from the bullish camp to the bearish camp. Really, when the market traded in this area and opened the following day, we exited that trade and we got out roughly in this area. So I was very, very quick to pull the ripcord, so to speak, on this trade because we had some good profits in there. Market came down the following day, and of course yesterday we saw this market move up a little bit, but now it has drifted, and it has drifted lower to our 23% retracement level. And that 23% retracement level, of course, is based upon a fib retracement really starting at about 1080 up to these highs at 1192. I am not putting it on this particular low because I thought that we'd get more valid information because of the abundance of lows and market cycles, or market lows and price points being right in this area. When we do that, of course, our first level of potential support comes in at around 1165. That is a 23% retracement and just above the low of the day. Should this low not hold, the next real level that you want to look at is going to be 1150 or 1149. And when we consider the fact that we have had tops that exceeded it, not by very much, call it 56, 57 in that area, if we do not find support here, the indication would be that we're probably going to drift down to about 1150 in terms of the price of gold. So my recommendation short term, of course, is that we maintain our neutral position. We are out of the market right now. We want to see if we'll find any kind of support at this 23% level. If not, as I said, I believe it will drift to about 1150. There we would look for signs for some kind of key reversal and a conclusion to this corrective wave coming after this nice long rally here up to about 1192. So my sense short term is that we should see this current little corrective wave probably terminate, if not at this particular point, 66 down to 1150. That would be some sort of an A. We would see some sort of a B, and then a concluding C, of course. At that point, we will have finished our corrective wave, or wave 4, and move back to a fifth wave. Now, traders, that fifth wave, of course, would probably terminate somewhere between 1200 and 1230. That's what I'm really looking at as a year-end prediction, roughly in this area, to kind of match these tops here. Now, also realize that this is all part and parcel. The current wave that we're in, which is 1 through 3, 4, and 5, is all part and parcel of a wave 1 that's off of this major fifth, kind of to put it all in perspective. So we'll remain neutral in the market, look for a key reversal, and let this particular model we're working with be our roadmap for the upcoming months. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow on Thursday for another daily update and review. Bye-bye.